Hey everyone, welcome to another edition of the CertiK Security Leaderboard Showcase. I'm your host, Munir Jalal. As you all know, in this showcase, I host a guest for a live AMA where we discuss their work with CertiK, the Security Leaderboard, and we throw in some questions for you, the viewers. Our goal is to raise the standards of security in the Web3 ecosystem. The Security Leaderboard can be found at CertiK.com. It's a free tool to help you safely navigate the blockchain world. Today, I'll be joined by Banksea Finance. They're contributing $500 of reward for today's top live questions. Make sure you read the rules on Twitter post at CertiK Community in order to qualify the rewards. So let's go ahead and take a look at Banksea Finance and the report.
Auditing is a complicated and essential step in the security process. At CertiK, we review the top DeFi projects to help you better understand the findings from our experts. Banksea NFT Oracle is a decentralized blockchain infrastructure that integrates data analysis, valuation, and comprehensive risk evaluation for NFTs. This audit covers Banksea on the Solana platform. The summary describes the audit and the types of analyses used. Overview shows the programming language, the blockchain used, and a link to the project's codebase. The vulnerability summary lists issues that need resolution. Audit scope displays which contracts were audited. Findings highlight all issues and ranks them in terms of severity from critical to discussion. In this audit, we found 0 critical, 1 major, 0 medium, 3 minor, and 4 informational issues. Banksea has resolved 6 of the issues. Visit CertiK.com for the full report.
There you go. That's the report. So let's welcome Hexie from Banksea Finance. I'm thrilled to have you join us, Hexie, here today. Can you go ahead and give us background on yourself as well as introduce Banksea Finance?
Absolutely, Munir. Nice to be here. Very exciting day. My name is Hexie. I work with Banksea Finance, and today I will walk you through a journey of where we have been, where we are, and where we're heading towards from a security point of view and also from an overall project point of view. I joined Banksea during this early stage in April last year when we're still ideating around the product. One area we found challenge is that the NFT market that is booming at the time have liquidity problems where the value of NFTs are rarely unlocked after purchasing. So the primary use case was to essentially speculate and sell and transact. We wanted to support ability to uncover some of these values by providing solutions that support lending and many other liquidity solutions. As we dig into the market, we came to realize that there's one core of infrastructural piece that is missing, which is the ability to praise a particular NFT at a given time due to the lack of transaction volume and also the high volatility of the currencies that are being denominated in for the NFTs. We came to realize the first problem, the hard problem we need to solve, is to provide price valuation for NFTs at a real-time basis through a automated API that any service or on-chain oracles can query. So that's what Banksea Finance is for the past year. We've been building APIs on-chain and off-chain that supports NFT data, NFT evaluation, as well as collection-related data. We support 700 collections on Solana right now, 10 collection on Moonbeam, and we have our on-chain oracle deployed through a decentralized mechanism on Solana DevNet as well.
Excellent. Great. Well, it sounds like you guys have a pretty good set of APIs out there for use for your consumers. Can you tell me a little bit more in particular why Banksea decided to release the Banksea APIs for Solana and Moonbeam?
Absolutely. This is an excellent question. We want to build in a place where people can use our service from the get-go. We started off with Solana primarily because we bet on the future of NFT trading volume. We expect that although Ethereum is the place where NFT is the most prevalent, due to the high cost, it was practically impossible to deploy some decentralized network on Ethereum with a relatively reasonable fee. So due to the price being too expensive on Ethereum, we started off with Solana, betting that we see a high activity of NFT transactions in the upcoming year, 1 year ago. And as time has shown, NFT activity is fairly strong on Solana. And then multi-chain became our strategy not too long ago, as we realized that NFTs are becoming prevalent all over the networks. So Moonbeam was the next our gateway into the Polkadot ecosystem. The third ecosystem, which is Ethereum, is a system that is difficult to support, primarily due to the large data volume that there is. And we're working towards supporting Ethereum in the near future.
Cool. That strategy sounds pretty good to me. Just moving on here, accuracy-wise and valuation, I guess, are important for this service, and so is availability. How is the NFT Oracle providing users with the most accurate, reliable information, but in a secure manner?
This is absolutely. So before we get into the details of availability and security, I want to just first introduce the product suites. So Banksea offered two types of product. The first one is an on-chain Oracle, where we have a fleet of decentralized nodes that serve price valuation requests. All of these price valuation requests were aggregated by our smart contract on DevNet today, and then served out through smart contract to readers from on-chain. So that's our on-chain endpoint. And then we have an off-chain API, which is a RESTful managed API that provides simpler data, such as property information, for example, popularity of NFT collection, trading volume, prices, purchase movements, transaction volume, as well as individual NFT price valuations. So the off-chain API is almost a more rich, feature-rich set of APIs. And when we're considering availability and security, we need to talk about both. So for off-chain API, where it's essentially protocol agnostic, this API needs to be highly available. And we have a fully continuous integration, continuous deployment suites in our backend setup for any changes that are rolling out. Effectively, we had a problem about 3 months back where we deployed a code bug into production, and it was notified by our customer. So since then, we've beefed up our monitoring system, our testing in regression, and also added approval steps such that the service itself is available. We also leverage the cloud infrastructure to prevent single region failures or single machine failures in this case. In terms of security, all of the new customers require to ask for a onboard through a onboarding template, which require them to input information, and then we will send back an API key from which they will be authenticated to call our system at a much higher TPS rate. That's the security measures we have in place for off-chain API. In terms of on-chain Oracle, it's available as its availability depends on the number of nodes we have. So today we deploy 4 nodes across 4 continents, each in North America, Asia, Australia, and I believe South America. And these decentralized nodes price gets aggregated, and the smart contract has a way to pick an aggregate price. So it prevents single point of failures. And then our on-chain contract obviously is audited and beta tested. We have bounty programs to catch bugs, and that's how we ensure our on-chain contract is secure.
Excellent. That's great. I like how you've continuously looked at ways to make this more robust, finding issues, but then putting that back in the cycle of just testing, and also security being so important to us as well, that you're actually doubling down not only on your authentication mechanisms on your APIs, but then doing bug bounties as part of the whole process to make sure that everything is secure. So great. Moving on here, what exciting applications and technology would you like to see being built in the future using Banksea Finance's API? And what have you seen so far in the way of innovation?
Today, we have three major category of products that use Banksea API. Banksea API is a backend service, so we mostly target projects or services rather than end customers. We obviously have our own website that call our APIs to surface our functionality to users. The first category is wallet or portfolio management. For end consumers who want to see how much their NFT is worth at this point in time, they need a portfolio management system. And in order to be able to tell the NFT's worth and show that like chart of how the price has evolved over time, how the value has evolved over time, they need to use Banksea API to query the history of a price valuation. That's their first and most user-friendly use case. The second is we've been working with marketplaces, and we've noticed that the traders actually were interested in the source data that Banksea used to train our price valuation model. So we've started exposing some of these source data like transaction volume, popularity, social media mentions, et cetera, We start exposing this information in APIs, and we want to plug these information into marketplaces directly such that the traders would be able to access them immediately side by side with their trading tools. The third use case that we've seen is for lending protocols. They need real-time updates on the price valuation to calculate their collateral threshold, usually like loan to value ratios is usually a term they use, and they need continuous updates for individual NFT level. Right now, we don't have any, we don't see many competitive products out there that support to the minute level accuracy for price valuation. So we see a lot of lending projects integrate with our APIs right now. And then these are the three major use cases we have so far that has already been built on Banksea.
That's great. And I like the idea of just having more data to share for investors to be able to make better decisions. So that's really awesome. And accuracy is so important, right? In terms of getting the data real time as quick as possible to make those investment decisions. Very cool. So moving on here, in a similar way to CertiK, I would say Banksea utilizes AI technology to operate their business. So I read. Can you tell us about your experience so far using this level of technology? What benefits have you seen from using the technology so far?
Yes. So Banksea used artificial intelligence, or more like machine learning technologies, to train the price valuation model. And we update our model on a regular cadence and run regression tests. What it has enabled us to do is to provide real-time price valuation that are currently at the per minute mark cadence. So the model is sensitive to real-time market data changes. For example, if there is a massive dip of Solana price, our model is able to pick it up due to the way we're training our model. It takes overall market condition as inputs to provide the price valuation. So this would allow our model to adjust the price valuation based on how the market overall is changing. And this real-timeness is absolutely critical when it comes to lending use cases where we want to ensure the liquidation happens in time. So the being able to do things real time is one major advantage we have. And the second is to scale. So at some point, at one point, we've trained our model frequently enough that we've automated the process of training the models and then released the model and running the regression test suites such that new collection addition became an automated process rather than a new hand-driven process. So with the infrastructure built up, the new collection that our protocol will be supported in an automated manner such that if, for example, the transaction volume has crossed a threshold where we can make meaningful valuation, we will start onboarding them through a decentralized voting mechanism in the future. Right now, we can just support them immediately. So that scale and real-timeness are the two primary advantages that AI technology brings to us.
Yeah, I mean, I think AI is in its highest level of buzzword, but if you really look at what AI does, it all comes down to a few things, really. The algorithm, I think the data, of course, and how well you're training. And I think from what you're telling us here is that is an automated continuous process. So you're providing that intelligence into the system, but you're doing it in a way that, works on data as well. It works on training and doing that in a frequent manner. So that's really good to hear. Moving on here, when providing borrowing and lending services of NFTs to the public, what are some of the major risks that you guys are considering? What happens during volatile times?
We see two major risks during volatile times from our experience with Luna and recent liquidations that are going on and trickle down through the DeFi space. We learned that liquidation needs to happen fast. So we absolutely need a per minute level update, and in the future, possibly per 15 seconds level, or even for 5 seconds level price update for the valuation will be absolutely critical, because overall market movement can happen in a very short period of time. And we want our client to be able to detect slippage at the shortest time possible. So in terms of the risk, we see that particularly being a major challenge to overcome, is to reduce to make this support even more real time. And then the second major risk we see is that there's possible price manipulation. So people can launch attacks by buying individual NFTs amongst themselves between two wallets back and forth. All they're paying is gas fee. These are some of the more common threat models. And we use our machine learning algorithm to actually mitigate that, as we train our machine learning algorithm with a myriads of data sources that include overall market conditions, collection-specific information, as well as individual items, trading information. So it's difficult to manipulate a single NFT item's price just by manipulating that item itself, because there are so many other factors that played into the price valuation. We're required to manipulate a significant amount of NFTs in a single portion, in a single collection, in order to manipulate the price. These are the mechanisms we build to defend against individual item support. And for the collections that have really low liquidity, we do not support them in our price valuation model at all, because we don't have enough meaningful data to provide valuation. And that's our second mechanism preventing these, easy to manipulate collections from attack.
That is very cool. And again, I'm hearing AI is playing a big part here in the whole role to give you that better service to investors. And for sure, I mean, the risk levels that you get in terms of investments based off how fast you're reacting to what you're seeing. So if you're providing that data in real time as what is needed, then obviously your investors are benefiting for that. So awesome. Very cool. It's moving on here. How is Banksea Finance looking to get more involved in the NFT gaming economy?
That is a question we don't have a great answer for. We're doing research on GameFi. We're doing research on what are the pain points and use cases of GameFi. So far, the way GameFi plan to consume NFT-related data is quite different from the way lending or portfolio management consume NFT data. So we're still doing actively research, and we'll absolutely share more information as we go.
Excellent. Okay, so you're heading down there, you're looking at it, you understand the opportunities there, but nothing at this time. Cool. Moving on here, how does Banksea value a utility-based NFT compared to a artwork-based NFT?
Haha. So yes, you're already seeing there's a divergence of different types of NFTs. That's absolutely a trend we're seeing, is that NFTs start to become more and more specified. Now we have PFP, utility, and then we only see this trend continue, where there's just going to be more and more differentiated aspects of NFTs that we're going to group them under. So currently, the way the difference works is that we train our model on a per collection basis. So anything that happens on this particular collection will get picked up by the model so that the future valuation will support the features in a particular model. Now, let me talk about this in a plain English. Art-based NFTs is usually more correlated to speculation pattern, meaning people will buy more, the price will fluctuate more, and there's more correlation between the price of the NFT as well as its social media activities, as well as the overall market conditions. And during the training process, we do regression testing. So this pattern gets picked up by the machine learning models on the weights of different attributes, such that when a prediction happens, these things will play a bigger role in terms of altering our price valuation. Now, for utility-based NFTs, they're much more correlated to the usage pattern. For example, transaction volume could be much higher. The price every transaction happens over will be much more stable. And these properties will also get picked up such that the price valuation would be much more correlated to these attributes, such as the transaction volume over the price itself. So these are the ways that the model would be able to differentiate between utility-based and art-based. As you can see in the future, when there are more use cases, this strategy technically works, and we'll start differentiating our model more as we see fit of new use cases come up that became hard to be supported by existing model.
Yeah, I mean, I can definitely see how the whole infrastructure built here is extensible for your future strategy in terms of the differences what is there and out there in NFT. So very cool. I'm going to switch over here to my favorite topic, security. And let's start asking the question, why CertiK? Why CertiK? Why did you guys pick CertiK?
It's just well, CertiK has tremendous experience doing security reviews, have seen a multitude of projects from small to large. That experience was something we absolutely wanted to borrow from. And also the tooling out there exists for doing security communication between engineers are very mature, so it makes the whole communication process easy. And more importantly, I think the way we work with CertiK, we utilize the Skynet tools to help communicating. So all of these absolutely play into a big part of why we're choosing CertiK. Most importantly, probably, is the timing. CertiK has a lot of experienced engineers, and they were able to rotate to our schedule in a very timely manner. So that absolutely was another big reason. Sometimes when you launch, you don't know when you want to launch, so the timeline kind of fluctuates based on your market research, and be able to respond really fast was very helpful.
That is good to hear, and it's interesting comments that we hear from prospects who talk to competitors that the timing that they get is not in line with their launch plans. So yeah, I mean, absolutely, not to beat that drum any further, but it is all about scale. It's how fast you can turn around stuff, but I'll also do it in a way that you have the infrastructure to run audits at scale. So very cool. So just delving in a little bit into the audit report itself, you had a few minor issues which you resolved, of course, but you had also one major centralized issue, which is common in projects I see. Can you tell me how you guys implemented a way to mitigate this centralization issue?
Definitely. So this centralized issue is related to a staking feature we launched for our own NFT collection, Citizen One. We build utility for our NFT collection by allowing users to stake their NFTs into our pool and then receive a reward. So this particular major issue was by design, in the sense that Banksea hasn't launched our token yet, and we want to get the tokenomics right before we launch the token. So there needs to be a mechanism for us to deposit these tokens back to the contract, which holds the reward distribution proportion, all that information. That is the reason we are unable to mitigate this major concern, because it's designed this way for now. The moment we launch our token and the rewards can be distributed back to the stakers, we will be able to start decentralizing the permission that we gave to the smart contract to a multi-sig wallets that we manage by our own Banksea DAO.
Very good. I mean, and by the way, this is by no means a surprise of how development is operating before launch, giving the opportunity that they can work in a centralized manner before launch to moving to decentralization. So this is no surprise, and it's nice to hear that you're operating in the same mode. Let's move over here to some live questions. We've got 5 minutes, and so I'll just take a look here. So just a reminder, if you got some questions, put it in the chat here. Put your Twitter handle, Telegram handle in there, so we know who you are. Here's a good one here. Let's bring it back up here. Assuming I'm the user or I'm an investor, which aspect of the project would you think would make me want to invest? What would appeal to me from the project perspective?
Assuming I am an investor, are you referring to an investor of NFT or an
NFT investor? Yeah,
of any NFT. I see.
Yeah.
What aspect of the project would you make me want to invest? What appeals to me? I think from the user point of view, right now, if you wish to know how much your NFT is worth right now because you've listed on your exchange and nobody has responded, this is why you want to use Banksea. You get to know how much your NFTs approximately valued, right? And why they're valued that way. We surface some additional details on Banksea's website. It doesn't require you to deposit your NFT into a contract in order to see it. You can just see it just by typing the name and number of your NFTs as long as they're supported in our search bar. So this will allow you to kind of get a better understanding of your own portfolio. And then you can even check out other people's portfolio by just checking other items and be able to have a better understanding of your own investment.
That makes sense. Moving over here to another question. Well, I think this is probably a fair question to ask. I'm just trying to find it again here. I lost it. The question is basically, given the uncertainty in the market here, how would you see Banksea expecting to survive in a bear market?
Bear market is the perfect time for building. We have partners that use our product, and the most important thing is to drive usage of your product. So let the market be bear or bull. It's just a matter of how much noise we see. Obviously, we've completed our fundraising round, so we have runway ahead of us. We have multiple years of runway ahead of us. But more importantly, we continue to tune our product to reach product market fit, onboard more clients. And I think these are the critical ways that Banksea will survive, to continue getting feedback from our customers and continue to iterate our product for our customers' use cases.
Yeah, I mean, it's a similar answer. If you got good funding, it's a good time to start building here. So good answer here for your viewers. Can you explain normal analysis and real-time artificial intelligence analysis? What are the benefits for us?
Can I repeat the question?
Can you explain normal analysis and real-time artificial intelligence analysis? I don't know if it's applicable. I'll put it up here.
Okay. I think I'm not understanding what a normal analysis mean. I'll explain what real-time analysis means. So by real-time, we mean that we're able to provide you a price valuation at every minute that can be different. So we take in, for example, a quick example would be Solana's current price would be one factor that determine the overall market condition and overall market emotions, and that particular information factor into how we evaluate an NFT. So if, say, all things remain exactly the same, but the Solana price changed or doubled from this minute to the next minute, you can expect your NFT price to valuation to change, not by doubling, but by a little bit, because of that particular factor changing. And that through that mechanism, we can tune all kinds of inputs to achieve real-time price valuation at the per minute level. So when you say real time, you really have to specify how real this time is. But at this
I
moment,
agree with that statement. Of course, the definition of real time is based on the measurement and how you're expecting to measure it. So very good, very good. So I think you answered that as good as possible. But yeah, it's an interesting question. We are
obviously in our backend, we will need to detect all the changes that are happening at a real time level. And that is our primary constraints from supporting a faster cadence. Is that we're listening, we're listening to changes, and it takes some time to process them.
Yeah, very good. So just closing out here, what's your plans for the future? Any last words you want to leave with the audience with, and really any other information and where to find that information?
Definitely. Quick things, we plan to expand to more ecosystems from our off-chain APIs to allow more users and projects to onboard to our service. We plan to expand the number of collections we support. We should be able to support Solana, the entire Solana collections that meet our valuation threshold very soon, in a month or so. And we plan to look more into other verticals like GameFi, SocialFi, and see how we could potentially play a role in these ecosystems.
Very cool. So a lot of exciting things today. Thank you so much. I appreciate you coming on board. I want to thank everybody for being on the show as well and your questions. Be sure to like and subscribe our show, and we'll see you all next time.